In the wake of Trump's tariffs, we see another absolutely unbelievable winning day on the markets. But of course, winning depends on how you define winning. The S&P 500 down 5%. The NASDAQ down nearly 6%. The Dow Jones down about 4%. Gold also got hit. The oil price got smashed. The US dollar got smashed. Countries around the world, their stock markets also down. And the big one, the house price index, the home builders ETF. We'll look at that all in today's video, along with the 18.6 year cycle. A lot of questions are getting raised around this being the end. The game is over. The bear market in full swing and a recession is most likely from this point. So let's unpack that in today's video, along with the price levels, the supports, the resistance, the breakdowns, everything you need to know. So hit the like button, subscribe to the channel. It's your home of macro cycle analysis with me, Jason Pizzino. Well, of course, Trump's out again talking about the markets. He believes that we're going to see the markets boom. How long is that going to take? That's the big question. I want to uncover that in the cycles today. But of course, Trump is very much thinking that this is going to be the greatest thing. This in turn being the tariffs. Now, if you're asking for my opinion, maybe you are because you're here on the channel. In the short term, after we get through this correction, I think the markets will bounce from this point, as we've looked at with the cycles. But in the long term, towards the end of the presidency, I don't think these tariffs are going to be very good for the market. And it could unwind a lot of the gains that we've seen over the last several years. Now, of course, some of those gains have definitely been unwinding at this point. They've gone further back from where Trump was elected president back in November. And of course, around the peak of the stock markets, which was right around his inauguration, the markets are down now about 12%. Well, that's the S&P 500 and the NASDAQ a lot more. So it is going to take a little bit of time. There's been a particular cycle that we've been watching now, looking at where some of these lows might form. I've talked about Q2, but I'll unpack that a little more in today's video. Now, if the S&P 500 breaks down from this level of 51.52, that is going to be in a very, very weak position, of course, because it's underneath the 50% level. Hasn't happened yet. The correction price to get there would need to be above 17%. So it'd be on the verge of a 20% correction, somewhere around that bear market volatility, right? But wicks are okay, but you need to see closes back above those key levels. And we've seen something like this in the past. Going back 10 years to 2015, that was a pretty severe year. Two major corrections there. One in the Q3 into August, you can see back here on the chart, and then also a second in Q4 into that December period. Things started to flatten out there, and of course, the market climbed back from that. And the other area of more interest to me is the 20-year cycle, going back to 2005, leading into the peak of the real estate cycle. So like the title's got, something around, can it end like this or it can't end like this? It still seems like we have more time left in the cycle, for one. But two, the big one, and I pointed this out on X, is that we haven't seen a breakdown in the house prices in the US, the land prices. For some reason in the US, they love to call it the home prices, but your home is just the physical thing on top of the land. The land is what increases in value. So once you can get over that mental gymnastics that it's actually the land value, not the home price, the land values have not broken down on a national scale and they're still climbing up. Some people's areas will definitely be going down, and I hear about it all the time in any comment section of YouTube or X, but it's not the national price. We're looking at the US real estate and economic cycle, which is a great segue into the 18-year cycle. Winner's curse phase. Don't get confused with this meaning that the prices only go up. Remember, we talked about this years ago in preparation of the winner's curse phase. In the winner's curse phase, prices can go a lot harder, a lot faster to the upside. Now, we still have a bit of time left in it, but not much. So to me, and what we've been talking about with the Investor Accelerator, also on Michael's channel, it doesn't seem like a great time for long-term investing, but more so a trader's market because of the time frame leading to the end. A long-term investor's market is somewhere around the low and somewhere back at the next lows of the mid-cycle. Even leading in to the peak of the mid-cycle can be a good time for longer term investing because you still have about 7 to 10 years left until the end. It's like the recent move into the peak there around 2018, 2020, then into the drop, and then of course the market rises up from there, which is exactly what's happened in the US, and then it flows over into the rest of the Western developed countries, like Canada, Australia, the UK. You've seen a lot of those land prices continue to skyrocket, and also the stock markets from that period, of course. So back to the winner's curse, which is where we currently are, traders market. And in a traders market, what do you get? You get crazy volatility. And that's exactly what we talked about previously. I mentioned it on the channel. You can go back to any of these videos, 2023, 2024. And in this one in particular, as it says in the title, first time in history, I'm saying this, we were looking at key breakdowns of the home builders ETF and basically some leading indicators that we were in the winner's curse phase of the cycle and that things are going to pick up in volatility. We said this before today. So I'm not saying that in any other way apart from just expect the volatility. I don't know when the top's going to come in. I don't know when the bottom's going to come in. I just expect volatility. And extreme volatility in this case. We've got a president who's bringing out tariffs, and that is obviously upsetting the market. That is part of the extreme volatility. I didn't know it at the time, but we just happen to expect the extreme volatility because that's what we see at the winner's curse phase of each of the cycles. Speaking of the cycles, this is the chart here put together by Fred Harrison, who published a book in the 80s forecasting the next 2 real estate peaks and busts. It does, like if you do it once, maybe. If you do it twice, amazing. Now he's on to his third one, forecasting for 2026. Now, Fred is from the UK, therefore this is tailored towards the UK, but you have a lot more data in the UK than the US. And so with this information, we're still in the winner's curse, 2025, and the peak is going to be somewhere in that 2026. I know a lot of people want to get an exact date and basically sell out the exact top. The point is not to try and sell the exact top, sell into the movement, buy into the collapse. And look what he's got here for the deep recession, 2027 to 2030. The previous one, 2009 to 2012, that was published before the event happened. 1991 to 1994, that also was published before it happened, and also the peak there of 1990. You can go back and read Fred's book, published in 1983. So this is going back 40 years. He's done it twice. We're looking into our third one now, at least in our living memory. And then that was all based off history that he was able to research going back 100 years from there. Samuel Benner, 1875. And you guys might be familiar with the Benner chart. I might post it up here. That's that one where the farmer chart, you can see on that sort of orangey background, up and down lines, and you're seeing where these peaks and troughs are happening into the future. Now, of course, some of these have to be shifted slightly as the years go on, but I mean, forecasting something 150 years in advance, which is where we are now, is a pretty damn good effort, if I don't say so myself. You might disagree, go ahead, okay? But anyway, can it end like this? That's the question I'm trying to answer here. I don't think it will end like this at this point based on the cycles that we've just looked at there, based off the land cycles, and finally, based off the market sentiment. Now, I'll keep it relatively short. You might want to dissect it further yourself. One big one, market sentiment at the moment. And the sentiment is obviously made up a lot of people calling for a bear market right now after the market's already down 12%. It could still happen. It could still happen, of course. And then also the sentiment being extremely fearful. Extreme fear is driving the US market. That's extreme fear today at 8. So this is the lowest reading on the CNN Business Fear and Greed Index for the S&P 500 in the last 12 months. And if we take this back, I found some historical data on this. You have to go back somewhere into 2022, which are these lows here, to get a more extreme reading on the Fear and Greed Index, obviously being extreme fear. And some of those extreme fear times were in May, happened to be very, very extremely fearful. Then a further low happened in June, big rally into August, final dump September and October, and then the market was able to stabilize through the rest of the year going into 2023. And of course, it climbed out of there. So where does this leave us now? Well, we have extreme fear at the moment. Could we go lower? Of course, I've talked about those low points on the chart for now, around 51, 5200. And that would give us our first major 50% level going all the way back to October. And if for some reason Trump kept going crazy, or if the markets didn't like what Trump was doing, we've even got the 4,800 level. So I'm not getting my hopes tied on that just yet for some sort of correction. If that were to happen from the high to the low, that takes you out at about 21, 22% correction from the high. So it's not impossible, especially with the volatility that's going on in the markets. But at this stage, still seems a little unlikely. So we're just going to keep watching the next level, which has been on the chart now since we had these tops here going back to December. And I posted about that here. You can find that video if you just post Jason Pizzino first time saying, you can find this video here going back nearly 4 months to mid-December. That's it there. Okay, so now we've got the S&P 500, some clear levels to the downside for support, or if the market was going to flip into a more bullish short-term position to then climb back into the strength here. Let's take a look at the short term. So we've got the macro there, just over to the short term. I'd been looking at this just a couple of days ago for the April announcements. So this is, having a look at where April can lead. And the election years are the dotted lines here. So post-election years, which is what we're currently in, going back around 70 odd years. And the first 5 trading days, you can see down here, are essentially down or flat. Now, of course, this has been far more extreme. We've seen 5%, and the day before was 3 or 4% for the S&P 500. But nonetheless, I'm just looking at the swings overall, and really, it wasn't a great time for the first week. Then after that point, you get a bit of a bounce, and then relatively flat until the end of the month. So just looking at the dotted lines here. Sure, you get a day down, you get a flat, you get a day up, a day down, a day up. It's just a whole lot of noise in the daily. We're trying to look at something that goes on for the long term. So I'm looking at that as well, just seeing whether this cycle will continue for April, especially with post-election years. And that takes us out to the final week of April, which then you get maybe a day or two that runs it up into the end. But closer to the action is the cycle here that I prefer to watch. And been following now, obviously since the beginning of the year, we're watching here for some sort of low in April, maybe a bounce out. But looking at the red line, it doesn't give us any sort of fresh new highs until the end of the year. There is another low to watch here roughly around June, and another low to watch in October, and potentially also August as well. A long way off, but something to think about here. For April, obviously with the markets down, bit of a move up, maybe just a relief rally. June, August, October. Keep those in mind because it could still be a pretty rough year. Now, the other things that we were watching for the markets overall, and of course, you guys are all wanting to know about Bitcoin. This is also looking like a reasonably good day, despite everything else that is going on that we've seen, a 0.8% increase. But let's take a look at the US dollar first. That has continued to capitulate. Down she goes. Another big day. Big volume here, and it's broken below the 50%. That reminds me of something that I'll mention in just a sec with the probabilities of how much further the US dollar can come down based on this 50%. So this in terms of the extension here for the weekly, broken the 50%, but there is pretty significant volume right now. So we have to see whether this is able to close above. But overall, it still seems like the US dollar is going to go down and eventually break through this 99-100 level that we've been watching now for a couple of years after the peak came in. You guys that have been around the channel since 2022, that was pretty much the top that we were able to identify on the channel at that time, the day before. But anyway, here we are down to 101. I think this is going to keep going. That's all part of the 18-year cycle. Generally in the second half of the cycle, you see the US dollar head down, and that's what is going on right now. 2022, prices are down. Now, the Home Builders ETF is getting very extended here, looking towards around 89. This was our canary in the coal mine for the overall cycle. I'm going to go through this in further detail with members, TIA Premium. So if you want to join us on that, check out the link in the top of the video description. We'll be discussing that on the weekly live stream next week. That's just for our overall portfolios. What I'll mention on the video right now, which I alluded to in December, just talking about how those tops come in and what it means, is that the clock is ticking, and I gave it roughly around 2 years from that point, which also lines up with the 18-year cycle. More on that in future videos. Before I get into Bitcoin, just having a look at the fractal here for the Dow Jones, just as a bit of a runway into the end of the year, similar to looking at the cycle pattern itself. This fractal here in the white stems back from 2005 and runs into the end of 2006. So looking at these lows, you've got something around now, March, April, maybe another one around June, another one here around September, October, as we looked at with the cycles, and really not much going on in terms of breaking to new highs until potentially the end of the year or into 2026. So just something to think about, and I guess more of a visual representation on the chart. Could be anything, it could be further down here. The point is just those swings. So once we've got this breakdown, just looking at where those swings could be and not to get too phased out of the market, especially with what's going on at the moment. So time for cryptocurrencies, and fear and greed indexes at fear for Bitcoin. Can you imagine that? Extreme fear was yesterday. Now we're at fear for BTC, yet the stock market, as we just looked at, was at extreme fear, the lowest reading in 12 months. So there's a bit of a divergence going on here with BTC, slightly lower low with a slightly higher close than the swing low here at 83,100. Today we saw 83,157. So it's still way too early to say whether this is the low that is forming, but you can obviously see some consolidation here under the 50% level, underneath 86K, and we're really seeing that 89 is the first very significant level to hold above. That's, of course, is the swing top in March, the swing top that we saw 2 days ago, the swing low back in January. So there's some real battle going on here between the buyers and the sellers. That's why that would be one of the first key areas that I'll get very excited for. I get excited if it broke down from this diagonal downtrend. That's going to be a very important level. The 50% is obviously another very important level, but 89 I would put as more emphasis over for BTC if it can hold above there. So we did see some increased volume compared to everything else that we'd seen, apart from the rejection day on the liberation day from Trump there. And so we need to see this thing continue to hold up, at least not put in lower lows with closes below that level. I did say I'll come back to the S&P and just look at those levels to the downside. I'll leave that for another video. I think this one's going to go on long enough, especially with Bitcoin and some altcoins that we want to have a look at. So in essence, can it end this way? We still have not seen any significant breakdown of the bull market, which could cause the bear market. Therefore, we have to remain with the bulls in a macro sense. But if you're trading short term, obviously you do you. There are plenty of swings that are going on at the moment. But it's important to differentiate the two, whether you're talking about short term or long term. In the long term, we still have not got that breakdown of the low at 76. We don't have a breakdown into the previous consolidation zone below that $72,000 to $74,000. And there's still no breakdown of 62,000, which is the 50% level. And you can see when these markets do get to those 50%, they have bounced off many of them over time that continue to put in some strength to the upside. And only when they break down from the 50% level do you really see acceleration to the downside. For example, previous cycle, tested the 50%, closed above it, tested again, weak rally, rejection, and then the breakdown with a lower close than all of that previous action, and then the acceleration continues to the downside. Of course, it is a long way from the top, but that essentially tells us that it's probably not time to be buying the dip, and it's probably going to be a lot longer in a consolidation phase before the market heads up again. Speaking of 50% levels, ETH has broken several of those over the last 2, 3, 4 months, going all the way back to December. The 50% extension here, the 50% range of the entire bear market was broken down at 2,900. Then it broke the lows, then it broke the shorter term weekly 50% level and tested it again at $2,063, and at the moment is still hovering at around $1,800. The levels to the downside still sitting around $1,500, $1,600. If that's broken, that's one of my next major targets, $1,100 to $1,200 for Ethereum. As for Sol, once these signals came in at the top, we had the 3-bar rule on the daily and the weekly, then the daily and the weekly again it's just been absolute hell for SOL holders. And you've got the lowest closes that you've seen for over 12 months. 62% down, has now extended slightly from the previous low. And so I'm still watching these next levels in this zone between roughly $80 and where it currently sits at about 110. So there's still further downside there to go. We're looking at XRP, had a slightly higher day yesterday, despite everything else that's going on. So it's in a slightly stronger position than ETH and SOL, but still nothing there to get too excited about with any sort of major turnarounds yet. And SUI also on the decline here, getting rejected as it rallied up to that 50%, back down and sitting on top of these previous highs for now. So I'm still looking at further downside for all of these altcoins. The ones that are sitting in a stronger position, if, and you got an if or when, because no one knows for sure, but let's say when, because you're on the channel with me, when these things turn around, I'll be looking for the stronger ones. And at the moment, the stronger ones are looking like XRP and potentially SUI here. Now, of course, that's just a broad look at some of the altcoins. We've also been checking the long-term charts or the broader charts here. Others, dominance has closed lower on the day and still below those swing bottoms. 3 days to go in the week, so in a much, much weaker position here than the other altcoins that we've mentioned. And then the USDT dominance in the last 24 hours has also climbed slightly higher, closing just above the diagonal downtrend. Not enough to really satisfy it just yet. Overall, the volume has been dropping off, and we've seen slightly more strength in BTC, but just in the short term. We still don't have anything of concrete value here. The concrete value would be closing underneath 4.75, 4.8%. And in that case, you probably see Bitcoin somewhere closer, if not above around $89,000. Now, there was a lot of analysis that we went through in today's video, looking at the stock markets, S&P 500, NASDAQ, Dow Jones, the cyclical analysis, especially the Dow Jones and the 18-year cycle, going back over 150 years worth of data. A big one there being the market sentiment as well, that typically we see around prices being down already. And then the strength that we're also seeing with BTC in light of everything else that's going on in the market. Can it end like this? Can the peak already be in and the market putting in a bear market, not to see new all-time highs? Of course, no one has the answer, but I'm interested to hear from you. I'll leave a pinned comment down below. Can it end like this? I want to hear from you. Do you think you're going to see new all-time highs before this cycle's over? Or did we see the peaks already in 2025? Let me know down below. Like, subscribe. I'll see you guys back here at the next video. Until then, take care and peace out.